I was doing research for a special report, and I was looking at this particular message board that has high net worth individuals. This particular individual made, they claim they made $3 million adjusted gross income. And they're complaining about moving to a certain area that would add about $350,000 to their taxes. So based on their situation, they would have an increase in taxes. And the question was, how do I reduce my income so I can reduce the taxes? Now, a good answer for that, and there's a couple ways of thinking about it, a good answer for that would reduce their income, but you don't want to lose the value that income produces. I am Justin Hitt with Sustainable Wealth Secrets. If you make a very high income each year, you're going to expect to have to pay more taxes now. The current administration, the climate of so much free money in the economy, you're going to have inflation, you're going to have more taxes, you're going to have a lot of conditions where you're going to have to pay out more. But I don't think the right answer is to earn less. Now, if you earn less because you're diversifying your money and you're investing it in other areas and generating cash flow, that's fine. But it's the thinking of, I will get less, so I pay less. And that's the thinking that I want to talk about right now. If you want sustainable wealth, you can't think about avoidance. You can't think about lack. You can't think about the punishments that society puts upon those who have high incomes and high net worths. And think about it. You see it in the news. The rich need to pay their fair share. Well, look, to create $3 million in income through a pass-through LLC, first off, the business structure is wrong. We could talk about all that. I actually had put together a report that I talked about some of these materials. But listen, if you're going to create $3 million in income, there's jobs associated with that. You're contributing by creating opportunity for other people. Let's say you make $3 million in income and you spend every penny. You spend every penny because you can't take it with you. Well, that spending is stimulation in the economy. If you have zero tax on it because of some wild tax structure that you have set up where you get $3 million in income and you have zero in taxes, you still cannot spend it all in a way that wouldn't help someone else. Think about it. If you bought a $3 million yacht with your $3 million in earnings, somebody's benefiting. The manufacturer is benefiting. The salesperson's benefiting. The people who took the time and effort to make that yacht is benefiting. Somebody benefits. See, the more that money stays in circulation, the more people benefit from the economy, the free market, the choices that people make with their money. Now, when the biggest objection to paying a high amount of taxes is that I don't believe the government is going to be as good of a steward with that money as you would be. See, if you have to pay $350,000 in taxes to the government, but you see the government give it away. You see the government has high administrative overhead. You see the government put it into programs that you don't agree with. You might be better off putting that $350,000 into a charitable organization, into an advocacy group that you believe in, into some kind of program that gives you a tax break. So you're going to spend the $350,000 either way. And that's better than reducing your income. Why should you have less so that someone else can have more? It doesn't work that way. You having more can help others have more. So why reduce your income? Now, I would structure the business in such a way. Now, I don't have the specific details of this individual. This is not a client. This is not tax advice. However, I would structure the business in such a way that you're not bringing home $3 million a year. And here's why. If your adjusted gross income is $3 million a year and you have not invested in tax shelters, you've not invested in property or assets that cash flow, you've not done a lot of different things that keeps that money in circulation, fully funded your retirement account, fully funded your children's education, prepaid insurance policies, contributed to your key employees' retirement, contributed to your key employees' long-term insurance, haven't paid for long-term care insurance for your parents. If you've not done any of these things, then you're making too much money. Okay? Now you're saying, well, Justin, who are you to say how much money I should make or how much I shouldn't make? If someone's asking the question, how can I make less? Well, the best way to make less is to invest more. And when you invest more, you get a benefit, an economic benefit. See, everybody's telling this guy that you need to pay your fair share. If you're going to move someplace, you need to pay the fair share of taxes. No, you need to pay your legally obligated minimum amount of taxes because, again, the government is not going to make the decisions that need to be made that are going to take care of you, that are going to take care of your community. What if the church down the street needed a new building? The government isn't going to decide on that. Now, if your faith aligns with that church and you feel a calling to help that church get another building, it's better to have your name on a building than the government to spread that money around to people who will not benefit those things that are important to you. If you've had a certain experience in life, like your parents brought you up and got you the skills and gave you the encouragement to be able to earn that much money or to earn any amount of money, why don't you start there and pay it back? See, these things will reduce your income naturally, but reinforce the value of relationships around you. Now, for some, it could be $100,000 spread over political candidates that you want to support who are going to give you kickbacks. It all depends. But again, you decide. Don't decide to reduce your earnings so that you can avoid a tax. Another approach would be to look at it is, how can I live where I want to live and have someone else pay the taxes? So you could start another business in that area, and your basis is going to be $350,000. You're trying to avoid $350,000 in taxes. I say death and taxes, you're not going to avoid them. So if you're going to spend $350,000, how can you spend the $350,000 in such a way that it'll cover your tax obligation? It's either going to lower your tax obligation or it's going to cover it through other people's money, through delivering value to a community who pays you funds, and those funds go to cover the taxes. Now, there's a lot of problems in here, and we can talk about all these different structures. We can talk about all the different approaches. We can talk about tax shelters, whether to live in Puerto Rico versus Hawaii, whether to live in Florida versus Texas. But it doesn't matter. You can take out 2 sheets of paper and write down on one sheet of paper scenario A and the other sheet of paper scenario B, and you can calculate these things up front and make a decision. But the mindset has to be right. You don't need to reduce yourself to avoid taxes. I always say tax avoidance is harder than tax planning. If you sit down and plan, how are you going to pay these taxes? Because what you want is more important than how much you got to pay in taxes. It doesn't matter. If they're taxing you 100% and you've got the right mindset, you'll find a way to get the money to pay the taxes. Or you'll make a decision to do something different, which doesn't have the obligation or the amount of taxes. But you never should go in and say, well, look, I make $100 million a year and I got to pay $100 million in taxes. I think I'm just going to earn less money. Sure, that thought comes through a lot of people's heads, but it's not the right thought. The better thought is, how do I get someone else to pay these taxes? Now, if you're making $100 million a year, you can buy the politicians necessary to change the laws so that you can find one jurisdiction, one business structure, one charitable trust or remainder trust or legal entity, or you'll find something on this planet where you can make $100 million and keep more than you're going to lose in the taxes. But it doesn't help you any to make $50 million because you've lost the capability. So see, at $100 million sitting across the table from a financial advisor, you got something to work with. Making $50 million, you might still have something to work with. Making nothing, you got nothing to work with. And so this individual has challenges with the mindset, also has challenges with the advisors. How did you get in a position where you're making $3 million a year and you're not aware of of structuring or reducing your expenses. You could, with $3 million a year, you could take out a $2 million loan and buy a small hotel wherever you want to move to, and then basically keep one room free for you to live in, and the hotel breaks even, and you end up not paying any taxes. Now, again, this is not advice on what to do or not to do with your money. It's the mindset. Why should you reduce who you are, what you do, your desires, your lifestyle, your decisions to make you less than what you are in order to satisfy a legal obligation? You know, you should be proud. They want to tax you $350,000. You increase your earnings by the amount necessary to offset the increase in taxes. See, rich people, businesses don't pay taxes. In fact, even employees don't pay taxes. Consumers pay taxes. And this is the difference between the mindset of a producer and the mindset of a consumer. The consumer who buys goods and services in the marketplace, they are ultimately paying the taxes that are levied on the rich and that are levied on the businesses. Because the businesses and the rich are those in that condition because they figured out a way to deliver value to a marketplace so that someone will exchange for that value money. Even Amazon and Jeff Bezos, his money's coming from investors. He gives those investors an experience and hope and an opportunity to increase their earnings. So they invest in Amazon. Amazon does its business. Jeff Bezos is taking home a lot of that money. Amazon returns some of that money in dividends. Amazon creates and innovates and does things to add value to the marketplace. Customers pay Amazon for work. Amazon's not 100% successful. They make a lot of mistakes. But they found a way to incorporate in Ireland the corporation so that they pay less in taxes. Now, the business itself is paying nothing in taxes. Again, it's the customer who pays the taxes. It is the consumer in the marketplace who pays the taxes. That very last person who consumes pays taxes. See, the government raises taxes on everybody when they raise taxes on anybody. Because about half of those who make good income, they decide that they don't want to, they just don't want to earn that much because I don't want to be taxed. They got the wrong mindset. The right mindset is saying, how can I pay these taxes and it not even show up on my radar? They probably waste more money in stupid cars and stupid houses and stuff. They're probably wasting more money in things they're not doing. So, for example, prepaying your life insurance, paying your debts, clearing all your debts, or setting the money up in certain types of funds or strategic funds, lending the money out and getting it to turn over cash to you. You've lowered your earnings. You've lowered your taxes, but now you end up getting capital gains tax. You end up getting money locked up in businesses that you can trickle out as you need it. You start having businesses that are covering lifestyle activities because you have your hands in all these different pots. Do you think Warren Buffett flies commercial? He's flying in a plane owned by his company that flies him wherever he needs to be, and I am guarantee he's doing business anywhere he goes. If he visits relatives, he's doing business in the area. He's writing off a large portion of his expenses, and that's why he pays less taxes than his secretary. Now, he doesn't really pay less taxes than his secretary. The percentage might be lower, but the amount of money he's paying is pretty high. He doesn't care about the amount of money. He cares about the net effective tax rate. So again, there's these measures that we look at. Your cost of capital. If you're making a lot of income and you have any debt, well, you can fix the income part without lowering your income. You could set up, if you know you're going to have $350,000 a year in taxes, you could actually set up investment programs, qualified plans, different types of things that would spin off passively the amount of money you'd have to pay in taxes. And then you don't have to worry about it because it's your investments are paying it, not you. Again, it's mindset. It's approach to problem solving. And it's all something you can sit down on paper and lay it out clearly and test scenario A versus scenario B. Now, if you don't have financial planners or your tax advisory folks, your legal tax services, if they're not up to par, you shop someone else. Because if you legitimately have $3 million and you can show on 2 tax returns that amount of income, and you say, hey, I'm looking for some suggestions on what we can do to reduce the tax basis, model this out, show me what you recommend, and we'll see if we need to be doing business together. Listen carefully, folks. Do not reduce who you are for some political demand. In some states, the tax rate's 11 and 12% for sales for personal taxes. You're already at a 30 to 40% tax rate federally. If you're self-employed, it could be 50% on the federal side. If you're not properly structured, you could be paying taxes on money that you shouldn't have received in the first place. If the business has grown to its maximum, then you should be worried about that business going away. There's all kinds of strategic planning. There's all kinds of financial planning. There's all kinds of structuring and layering and how you set up that business so that you don't have problems like this. But again, you're not really paying the taxes in the first place. Your customers are paying the taxes. The consumers are paying the taxes. I'd take $100K right off of that and advocate for lower taxes. Some kind of tax model that gives relief to both the well-served and the high-income individuals so that they can hire staff and they can hire and grow their businesses out, but also the individuals and the street. If a business is being charged 50% in taxes, they got to mark their prices up to cover that. If they can't mark their prices up to cover it, they have to close down and everybody loses their jobs. Mindset is critical. If you want sustainable wealth, it's not a single factor. It's not increasing or lowering your income. It's not increasing or lowering your net worth. In fact, it's hardly ever lowering your net worth. It might be liquidity versus long term, but ultimately, it's a multiple variable approach, multiple scenarios, work them out on paper, model them in spreadsheets, and then make a decision. But never, ever accept less if you can deliver value to a marketplace, because you're helping people. These consumers are buying things they want to buy. Nobody's forcing them to buy from you. In fact, in most marketplaces, they have choice. And if you stumble or make a mistake, they're just going to go someplace else. So ultimately, they're making the decisions. The consumers are paying the taxes, and the consumers have control of the marketplace. You're there at their whim. So find a way that they can pay the taxes that you need that are being burdened upon you. Taxes don't go help people. They don't create social programs. They create overhead in government. The more taxes the government collects, the more things they find to spend it on, and the more programs they create, the longer those programs exist. We can go into that later. I wrote a report for another client about how to make money from government programs, basically how to use these programs in their particular business. And I've written this type of report several times for different types of businesses. But again, don't minimize who you are. Don't do less in order to avoid something. Figure out how to plan for this type of thing. What if my state decides to retroactively tax? California, for example. California's talking about wealth taxes, talking about retroactively taxing people that they presume are resident citizens of their state. Planning beats avoidance every time. I'm Justin Hitt with Sustainable Wealth Secrets. You can visit me at www.sustainablewealthsecrets.com. And we're really about building sustainable wealth. Wealth that is so strong, it can't be taken away from you. You're not going to worry about these little things. You're going to focus on creating value in a marketplace, being a producer, and taking it to the next level. Thanks for listening. I'm always interested in your questions.